What's going on, guys? So we're going to take a little look at Nvda, do a little technical analysis now that the market is over. After hours is still kind of trickling on. Kind of a weird, after hours we were down on the triple Qs, like trading at $341. Microsoft after earnings, completely sold off. Then it gained all the entire move back. Now it's giving it away. Weird stuff going on in the stock market right now as far as like the volatility in the intraday swings, like up and then give it all back and then lose a significant amount and then regain it all back. I mean, not the way that you really want to see the stock market react. There's opportunities to make money with some trades. It's just the follow through is not there. You're going to have to take profits a lot sooner. You're going to have to keep your finger on the trigger a lot quicker. But with that being said, let's take a look at Nvda. So we did close at $223.24. We did have that last hour sell off on a lot of tech names. So currently in the after hours session, we're trading at $224.20. So we're up about $1. Okay. We did lose $10.48 on the day, and we lost 4.5% on the stock. So what we're looking at going into tomorrow, I think that we need to kind of get away from the 1, 2, 5 minute time frames and kind of look at bigger picture. Like let's look at a more macro view, like the 4 hour, the daily, and the 1 hour time frames. If you're a traditional scalper, maybe you want to scalp using 1 hour channels. If you're a day trader looking for a little bit of a longer move or a bigger move, let's use probably the 4 hour and the daily. So the big macro levels that we're looking for here on Nvda is to take out previous day high or previous day low. We don't want to sit here and trade and get chopped up if Nvidia is going to trade with inside a 5-point range, go up 5 points, down 5 points, up 5 points, down 5 points. So what we kind of want is, to the long side, what we're looking for here is a breakout over 230, 229.93, looking for that breakout over 230. And then we're looking to take profits right here into the 5-day moving average at around 236. So we got about 6 points, 5 points worth of move. Obviously, you're not going to catch that whole expected move. Nobody ever does, but if you can clip off 1, 2, 3 points on Nvda to the long side, if we can confirm the day's highs and go higher, definitely do that. If the market does, kind of push up tomorrow, and let's say we have a little bit of trouble and you didn't catch this trade long, wait for that washout, and that washout through the lows, 219.89. And I think with that, you have potential all the way down here to 208. So the larger macro trade is still to the downside to retest this channel here from 219 down to 208. Obviously going long, we only have room to about 236. Not saying that we can't push back up here to 242, but I'm just saying though, if the last thing you want to do is enter into a trade perfectly at 230, come up to 236, get your greedy little hands all over this thing and not want to sell, and then come rolling all the way back down. And now you turned a positive position into a negative position. So with that being said, we kind of have to trade in between the lines here, kind of just have to focus on the little bit of a longer time frame plays, allow things to set up, and really see what the stock does. If we kind of take a look at the 4 hour time frame using the same levels that I got here, you can see we came down and tested this area once. So what I can see is us getting back up to 230, potentially even 233, having some trouble there in that area, and then rolling over back down. And if we do have trouble in this 4 hour 20-day moving average price here at around 232, 233, and we do come back down, you can use this as a short position, kind of use this as your ceiling. If we do get back above it, close out and cover your short. And then as long as we're trading below it, you can kind of just ride this down, potentially to around 211, 208. Obviously, if we do break over the 20-day moving average, we do have a lot of room to fly intraday. So like, let's say the market really wants to get going over 233, 234, we do have potential to come all the way back up to 250 intraday. Obviously that's intraday, anything can change, but like that would be a huge move. The market would need to be like surging higher. I'm just kind of looking at the after hours on the futures right now. I mean, we were up almost 60, 70, 80 points on the futures, and we've kind of given them all back. Microsoft was trading at 299. Microsoft, get this. After earnings were reported on Microsoft went from 288 to 269, all the way up to 299, and now we're down at 292. Unbelievable what is going on here. I think it's a lot bigger than us. It's institutions. It's big money, big pocket funds that are selling and running these algos, and they're ramping up these prices to maybe sell and get out of their positions. I'm not sure. Like, do they really want to see a bounce, or do we want to see more continued selling? Because it looks like every time we get any bit of rally, immediately that rally gets sold into. So it's like none of these rallies hold. And if we kind of look at Nvidia here, we have this first high here, and then we have a lower high, we have a lower high, and then we kind of just drifted, and now we put in a lower high. Now we're drifting again. So are we going to, drift below 208, get a bounce into 208, 210, get a lower high here, and then continue to sell off? It's hard to navigate these markets. And if you can sit here and you can say that, this market is easy, it's volatile, things are going up and going down, I beg to differ. Like, I've taken my fair share of trades over the last couple of weeks. Some winners, if you guys want to see, go to my Discord, go to the profits and gains section. You can see I pulled a $4,000 banger out of Tesla. I've pulled $300 here, $1,000 here. Yeah, but I'm also taking a little bit of losses along the way. Just, thankfully, I'm managing my risk well, so that if the trade does go against me, I'm just kind of nipping it in the butt. But, like, with that being said, I'm currently in an AMD call that is probably going to be down tomorrow. It doesn't look like that move is going to hold. But, it is what it is. So if you just have to kind of respect the technicals, kind of slow down, stop looking to make the quick buck really, really fast, and just kind of zoom out and look at the bigger picture. The bigger picture is telling us that we obviously are in a correction. We are approaching a bear market in indexes, and many stocks are already in a bear market. So with that being said, the overall trend is down. So any rip is getting faded. So anytime we have big ramp up, it's your opportunity to hedge short or put on a short position for the downside. Anytime we get these big ramp ups, put on a short position, hedge it to the downside. And that's how you can kind of keep playing these levels. Now, if you're more of like a perma bull and you're always looking for the upward move, well, then you have a little bit more of a tougher time navigating these markets, just because a lot of these moves, they don't have follow through. So you kind of establish that bottom. It looks like it's going to hold. It gives you that green move in your favor. And then in the blink of an eye, they kind of just quickly yank it back down. So very, very tough on the long side. If you're planning on bouncing anything and going long, when you get the move in your favor, I don't care how big of a percentage gain it is, you're not really looking for that 60, 70, 100, 200% gainers. You're looking for, 10, 15, 20% on your money. If you can get into a play, especially if you're playing options, and you can get 20, 25% on a possible bounce play, take that cash flow, just because you don't want to be sitting there holding the bag when they pull the rug on that next leg down. If you're shorting, the market is kind of saving your positions a little bit. You can have somewhat of a bad entry on a short position, even though you might have to stomach a little bit of drawdown on the bounce. Overall, in general, we're trending down. So the market is coming back and kind of saving you on your short position. But just kind of wanted to map out the levels, show you guys what I'm actually looking at here. On Nvidia. So like Nvidia here, I really want to see it get over this 229. I'm just going to make this 230 just to make things a little bit more cleaner. I'm really looking at 230 to the upside. That would be reclaiming the 50-day moving average on the 1 hour time frame. And from 230, we're going to have that initial push to 233. And then that would send us into the next channel with next price target of 240. To the downside, I still think we need to, to the downside, it's tricky. I mean, you have a little area here at 215. If Nvidia loses 215, has room down to 208. A little bit of a cleaner play would be maybe 213.24. So I'm going to kind of mark out this level here. That's going to be this bottom shadow. 213.24 to the downside could potentially give you room to 208. And obviously the big macro trade to the downside on Nvidia is going to be any loss of 208.86. That's going to be your big measured potential there on Nvidia. Guys, if you like this video, you enjoy this technical analysis, and you want to see more videos like this, please subscribe to my channel. Also join my Discord. That link is down in the description box below. And also, if you guys are looking for a strategy, you guys are looking for, a way to become a profitable trader, kind of control your emotions, learn technical analysis, learn supply and demand, I've got a fantastic trading course that is down in the description box as well. If you guys are looking to trade futures, I also trade some futures. I am a funded prop trader with Top Step. I can offer you guys 20% off on your enrollment. So if you guys are looking to go through a combine, kind of prove your skills, like if you're a trader, you should be able to trade in any kind of market. And if you have a strategy, you should be able to, cut losses in any market and take profits in any market. So with that being said, why trade your own capital when you can trade for a prop firm and trade up to $150,000 of prop firm money, just as long as you are managing risk and you are a profitable trader? That link is also down in the description box below if you want to learn more information. But until next time, guys, I will see you guys all on the next video.